Oh boy, do we have a lot to get into here in this video. We have some earnings that just came out not too long ago, including Rivian, that I think you need to hear. Beyond that, we will go over what to expect in the markets coming tomorrow via your economic data as well as earnings. And tomorrow is going to have huge implications for where markets could go next. And with that said, Tesla stock was down almost 4% today. Is it going to get worse? Or is this the end of it? Hit the like button and subscribe to the channel if you make it to the end of this video and or you learn something or like my perspective I provide twice a day. Every single day. So first up, Rivian earnings are out. Rivian stock initially fell about 5 to 6% before recovering, going positive about 2%, and now you're falling again, down about 2%. So it is extremely volatile, but here are the numbers. Rivian's Q1 EPS came in at negative $1.24 versus the estimate of negative $1.17 per share. Revenue beat, coming in at $1.20 billion versus $1.17 billion, as was the estimate. Adjusted EBITDA loss was $798 million. Rivian also lost a whopping $38,798 per vehicle built in Q1 versus $43,000 in Q4. So that's actually almost a $5,000 loss reduction per vehicle from last quarter. So that's pretty impressive. But just for perspective, you could buy a Tesla Model 3 standard, the lowest variant, for every Rivian that Rivian sells, just in the loss alone. Rivian says that in the first quarter of 2024, they hosted over 28,000 demo drives, a 91% increase versus the fourth quarter of 2023. Rivian did reduce their 2024 capital expenditures guidance to $1.2 billion from previously being $1.7 billion. And although Rivian is losing roughly the equivalent of a Model 3 per Rivian that they sell, about $38,798 per car, as a loss, Rivian's loss per vehicle was about 4 Model 3s, about $124,000 in Q4 of 2022. So they have come a long way. Rivian was actually up around 10% to start the trading day today based on rumors that a partnership with Apple is coming, and whether or not Rivian provides more clarity later on during the earnings call tonight, that's probably going to dictate what happens with the stock. And I think this is one of two other reasons why Tesla stock was down 4% today, because Apple's a big company. If they do partner or outright buy a company that's actually building electric vehicles now, that could mean more domestic competition, and that's not exactly great for Tesla. Do I think that's something that you should worry about as a Tesla stock investor? Absolutely not. It'll be years before that's a genuine concern. The bottom line is Rivian is guiding for 57,000 deliveries this year. Tesla does 3-4 times that in the US every 3 months. I mean, it's going to be a long time before Rivian can try to even hold a candle to Tesla. So that's not something I worry about at all, and I don't think it's a logical worry at this moment in time. So I think Tesla stock will get over this aspect of it, unless Apple just outright buys Rivian or they plan another factory. Who knows? Wall Street can act pretty emotional. The other bad news we had today, which I think was a bigger driver to what happened with Tesla stock, was the NHTSA. They basically asked Tesla about the mileage consumers are driving on their FSD and autopilot software and what the disengagement rate is, especially before the December recall. That has some investors a little, again, emotional, a little concerned that maybe there will be restrictions put on full self-driving and or autopilot, but that seems pretty unlikely at this moment in time. And I'm sure Tesla would sue the crap out of the NHTSA, and I don't think that goes anywhere. So I don't think that's something to really worry about either. The biggest reason why Tesla's stock sold off almost 4% today, as we talked about in the last video, weekly insurance registration numbers out of China came in high Pretty dang good. Came in at 10,900 for the period of April 29th through May 5th. This compares to 5,900 in this same week last year and 3,200 in this same week of 2022. So the number for this week was really good, but Wall Street got hung up on a negative 18% year-over-year decline from April of 2023 through April of 2024, which sounds idiotic if you think about it, because I mean, there was no chance in hell that this week, the last week in April, was going to cause that number to look that much different, right? We didn't sell off on this news yesterday. We sold off today because the data finally came out and showed us, but we already knew it was going to be down a lot. So I don't really think this will have any lasting negative effects on Tesla. After all, we just got Tesla's earnings call, and Elon Musk pretty clearly said that he expects positive delivery growth in 2024. On a month-by-month basis, it's going to be bumpy and it's going to be rocky. But that's what we're expecting. Now, the data coming out tomorrow, specifically a 10-year bond auction and more Fed speakers, that can have a larger role to play for broad markets. More specifically, what you want to be watching for tomorrow is ARM earnings. But more on that in just a little while. But first up, I would like to share this clip from Altimeter Capital's CEO about Elon Musk and Tesla. He says, quote, "Elon's done an extraordinary job, and his advantage in AI and full self-driving relative to all the other manufacturers in the world is deeply underappreciated. I described FSD 12 as a ChatGPT moment for self-driving. Unless you have the data, you're going to have a very hard time catching Tesla in FSD. I don't think BYD will be able to play in that game either."
Driving, autonomous driving and the like in Tesla, which you revealed on our program the last time we spoke. What takes it from a quote-unquote small position to something larger? What do you need to see from Elon and that company from here?
Well, first, let me say, I think Elon's done an extraordinary job, and I think his advantage in AI and full self-driving relative to all the other manufacturers in the world is deeply underappreciated. I described FSD 12 as a ChatGPT moment for self-driving. After 10 years of marginal improvements, we had a profound breakthrough around the imitation learning of FSD 12. I think that will be an incredibly valuable asset to the company. I don't think it's an asset that can be replicated by other OEMs in the United States. They simply lack the data. And this is data in, pixels in, and control plane out. So unless you have the data, you're going to have a very hard time catching Tesla in full self-driving. I don't think BYD is going to be able to, play in that game either. And I thought it was fascinating. At the moment that the United States is banning TikTok, that the Chinese government is providing permission to Tesla to do full self-driving in partnership with Baidu in China. It shows the resilience and the strength of the relationships that Elon Musk has in China and that Tesla has in China, and their own push toward AI. So I think, you can't think of the company as an auto company. You have to think of it as a technology company. Today, we think that it's, fully valued. It's been a volatile ride. But we think this may be one of the companies that can break through on energy, can break through on AI and FSD. And so we're paying very close attention, because if we start to see the adoption and the conversion on FSD that we think is possible, this will be a story like Apple and services, where services becomes an increasingly important part of their profit makeup.
And it's important to remember that Tesla puts all of the hardware into the cars up front. Tesla already puts the FSD chip in the cars. They already put the extra cameras in the car. It's literally just a software update to take the car from a normal car to a maybe not fully autonomous vehicle, but pretty close to fully autonomous vehicle, just with an update. That means those margins are north of 90% net accretive bottom line margins. As you do get closer to the launch of FSD entering the Chinese market, which literally could be any moment now, but I'll give Tesla and Elon the benefit of the doubt. It's probably going to take a little while to actually get the partnership rolling with Baidu and get the software updates into all of the Teslas. before they can officially launch their FSD service in China. But when that happens, I think that is going to be the Chat GPT moment for Tesla, because that's going to put the whole world on notice. I mean, China has 3 times the population of the US, and over the last 2 quarters now, Tesla has delivered more cars in China than the US, which the US has historically been the most important market for Tesla, but quickly that's becoming China. So FSD entering the Chinese market is going to be huge. That's not to mention Canada, which should be getting FSD here pretty soon, as well as Europe. Add all of that together, and in just a couple of quarters, you could see Tesla's EPS really start to balloon. Not to mention, again, all of the staff reductions that Tesla is doing right now, that should also start to boost profitability in the next quarter or 2. Yes, there's severance costs and all of that. Q2 is probably not going to be great for profitability either, but Q3, Q4 could be really good. And then 2025, yeah, the picture for Tesla looks very optimistic. You also had this article that came out from Reuters, go figure today, that Tesla will shut down production at their German plant for 4 days. This is according to a German newspaper, Handelsblatt, that reported on this here today. Now, Giga Berlin operates Monday through Friday, so they're shut down on the weekends anyways, and they were just shut down an extra day. So really, it's only a 1-day shutdown that happened on Friday. You are currently back to business as usual over in Germany, but this was apparently due to protests of the expansion plans. This article from MT Newswires says, slowing sales drive Elon Musk to send Tesla's fireman to China. Tesla's chief executive Elon Musk has deployed his trusted lieutenant Tom Zhu to China amid slowing sales in the country, according to the Wall Street Journal, and citing a person familiar with the matter. Final option activity today for Tesla by big money. These are hedge funds, institutions, and money managers. It's pretty negative, but here's kind of the overall picture. You had 72 different trades totaling $12.61 million with a positive order value of 27%. So it was a pretty bearish day in Tesla options, but not a lot of options were actually placed today. Today was one of the slowest days, if not the slowest day I've seen for Tesla option activity by big money in a very long time. So even though it was really bearish, there wasn't a lot of people, or firms, I should say, going out and buying bearish Tesla options today. A sign that maybe this will just be a short-term, I don't want to call it a flash crash, but a short-term, pretty red day. Whether or not this turns into a larger down streak for Tesla and maybe even the broader markets probably comes down to tomorrow's earnings. Now, pre-market, you're going to have Uber. They are now incorporated in the S&P 500, so that one could be a little bit more important than they previously have been. Shopify, that one could be important as well. Affirm could be important to judge the state of the consumer and how much the consumer is spending money. Toyota could also be specifically important for Tesla also. So keep those in mind tomorrow morning. But your big earnings that will have an effect on the entire market is ARM. Now, ARM does most of their business with NVIDIA. Remember, NVIDIA tried to buy ARM and it was blocked by European regulators because ARM and NVIDIA do a lot of business together. It was deemed as a move that would have made NVIDIA and or ARM at that point almost like a monopoly corporation. They do a lot of business together, hand in hand. Well, your other AI stocks have already reported earnings, like AMD, SMCI, Intel, all of the other guys, pretty much. The other one that has not reported earnings is obviously NVIDIA, the most important one of all. So considering this close relationship ARM and NVIDIA have, I think you're going to get most of the sympathy reaction in NVIDIA based on ARM earnings. I don't think ARM is going to affect AMD, SMCI, the other semiconductor AI stocks that have already reported earnings because their earnings are already out there and they've already reported. But NVIDIA could definitely be influenced by ARM coming tomorrow. So if ARM misses or beats, it could be presumed that NVIDIA will beat or miss. And I think there's still quite a bit of fluff, if you will, in the markets based on the AI trade and a subjective miss coming by Nvidia based on ARM earnings could be bad news for stocks tomorrow and after hours, and then obviously on Thursday. But I will tell you, I was super bearish on ARM for a long time, and I'm still not that optimistic on the company. I still think it is highly valued, more than it should be, but it's not as bad as it once was in the 160s, 150s, 140s. The stock has fallen considerably down to about 108. So yes, could the stock fall further? Of course. But I think you're better priced for average earnings now from ARM. Yeah, would the stock probably fall if they just meet expectations? Yeah, but is it going to fall 20+% if they meet expectations? Probably not. 5%, 7%. That's what I would expect to the downside at this point. Would that have a disastrous effect on the markets and or Nvidia? Probably not. That's my base case expectation. Now, if ARM outright misses, the stock could fall 20+%. And Nvidia could fall 10+% based on a sympathy reaction if I were to guesstimate. Last earnings, ARM came out and shocked everyone. ARM was up over 50% upon their last earnings. That was a huge winning trade for anyone that had calls on ARM. So it's one of those things. It could go either way, but I think you're probably better priced for bad news now. As far as the calendar coming tomorrow for economic data and activity, you're going to have a lot of oil data coming out at about 9:30 in the morning tomorrow. Fed Jefferson will speak at 10 o'clock in the morning tomorrow. Fed Collins speaks at 10:45 in the morning tomorrow. And then you do have a 10-year bond auction. These are important because it directly affects your 10-year treasury yield, and that's what lending is resolved around. If you go get a mortgage or an auto loan, you're getting a rate based on where the 10-year treasury is at. That's why mortgage rates move around so much. What lenders typically do is just add 3% to the 10-year treasury. So that mortgages are roughly 7.5% right now. I can tell you that. I was a real estate agent, still technically licensed, just don't do it that often anymore. Doesn't make a lot of sense to do that anymore. But that's kind of how things work. So if you do get a lot of demand for the 10-year treasury auction and people come in and specifically banks buy up the auction, then the yield's going to fall, and that's going to have a positive effect in bringing down 10-year treasury yields, which could boost the markets and boost the markets by quite a bit. Now, if not a lot of banks show up to buy the treasuries at the auction, well, that's bad. And that would mean 10-year treasury yields will probably go higher. And these 10-year treasury auctions lately have had a huge effect on the markets, and that's why I bring it up here in this video. That does happen at about 1 p.m. tomorrow afternoon. Fed Cook will speak at about 1:30 p.m. for this, not the second time. You have Fed Cook, Fed Collins, and Fed Jefferson. And again, you had Fed Kashkari today that was talking about maybe needing to raise rates again, and maybe they're not restrictive. About as bearish as you're going to hear from Fed officials. So I think tomorrow you could actually get some more dovish commentary from these three Fed officials, and that could be positive for broader markets. But as for Tesla stock, as long as nothing drastic happens tomorrow and after hours with ARM earnings, as long as the 10-year treasury yield or Fed speakers do not crush the markets even further, I think Tesla's probably going to regain that 180 level, maybe even tomorrow. I'm still confident, still pretty bullish in this week is going to be a good week for Tesla. After all, I think today would have been a very good day for Tesla, considering IWM was by far the outperformer today. I think that trend is probably intact, especially as we get more economic data and the markets, I believe, start to price in the first cut coming July 31st, 2024, which is just a couple months away. So yes, today was a bad day for Tesla, but I'm not expecting it's going to get much worse from here. If it does, then you want to target that 160 level. That should be a solid level of support, but that would still be downside of about $17 from here. And I don't see that as happening. And if that does happen at this point, the market's probably got a lot worse, or we get bad specific news from Tesla, like further price cuts or something along those lines. So let me know what you think about this information down below in the comments section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.